everyone. This is Marshall Giller, Head of Investment Research here at Fxprimus, with some comments on yesterday's shocking Brexit vote. Now, I've been in the market almost 40 years, and this was the most significant scheduled event I've ever experienced. I've seen a lot of surprises, ranging from the fall of the Berlin Wall to the collapse of Lehman Brothers, but I've never seen a scheduled, orderly event that changed history like this before. Everyone's wondering now, what's next? The problem is, this has never happened before, so we don't have any precedent to go by. We only have questions, not answers. Some of these questions are, who will replace Prime Minister David Cameron? And what will his or her policies be? Nobody knows. What kind of arrangement will Britain be able to negotiate with the European Union? Nobody knows. It's certain, though, that the other European countries won't be happy to see Britain go and won't want to make it easy on them. Meanwhile, the Scottish National Party will try to call another referendum on Scottish independence. So while Britain's preparing to leave the EU, Scotland will be preparing to leave Britain. And who knows what Northern Ireland will decide to do? How will the Bank of England respond? The fall in the pound makes a rise in inflation more likely, but the shock to the economy means slower growth. Which problem will they prioritize? I don't think even they know yet. Now, the Brexit decision is devastating for Britain, in my view, but it's potentially even worse for the European Union. If Britain can leave, other countries can leave too. European integration will come to a halt as citizens demand more sovereignty and less Europe. Unfortunately, the Eurozone needs more integration, not less, in order to make the euro work. The rise of Eurosceptic parties is going to make it more difficult, if not impossible, to deal with international issues such as the Greek debt problem or bank insolvencies. Finally, if Britain can vote to leave the EU, does this mean that the US can elect Donald Trump? I don't even want to think about that. All told, there are a lot of political problems and not many easy solutions. That suggests to me that once again, monetary policy will be the path of least resistance. I see British and Eurozone monetary policy remaining looser for longer than it would have otherwise been. That, together with the unparalleled uncertainty, means a weaker pound and a weaker euro. The dollar, the yen, the Swiss franc, and gold are the likely beneficiaries in the short term. In the longer term, I think emerging market currencies with higher interest rates and decent fundamentals, such as the Mexican peso, could benefit from the lower for longer stance of the major central banks. This is Marshall Giller, Head of Investment Research at Fxprimus. Get more market insights on our education pages and turn your trading ideas into action with Fxprimus, the safest place to trade.